Welcome back. I'm Pratap here. Today is 15th January 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated in previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars and we are providing complete free training. You can access all the training lessons at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday, end of the day report, we identified 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 high liquidity zones from daily and 75 minutes time frame. Among these 9 stocks, we got trades from 4 stocks. Let's discuss them. First one is NMDC. NMDC is a daily high liquidity supply zone. This is a drop candle. We have 3 base candles and we have a drop candle and follow through candle as per the zone identified by our NeoStock software. Okay, this is our software identified this as a daily high liquidity supply zone. And this daily zone we fine tuned with 75 minutes time frame. See, in the 75 minutes time frame, I have identified the 75 minute zone as a drop candle, 3 base candles, and again a drop candle, drop base drop. This 75 minute zone again fine tuned with 15 minutes time frame. Within the 15 minutes you have again a 15 minute zone. So this is a big candle, hide it, you get the clarity. See here, this is a failed ERC candle as a drop candle. You have 3 base candles and then you have a big drop candle. That is the way I have drawn this 15 minute zone. Within the 15 minute zone you have a 5 minute zone. See the risk of this 5 minute zone. But before that, see this candle, this is a rally candle, failed ERC. Here you have a base candle. How to draw the zone like this? But if you draw, risk is very high. Risk management is difficult, especially intraday point of view. If you are planning short-term trading point of view, okay, this risk is acceptable. You can do position sizing and you can plan your trade. Of course, intraday short traders also, you can plan your intraday short trades based on by doing position sizing. But the futures traders, it might be difficult unless you are a very high volume investor. You may buy 100 futures. At the time, position sizing is possible in futures. But if you are buying only 1 future or 2 futures or 3 futures, position sizing is difficult. So what is the other option for you? You need to reduce the risk. How you can reduce? By adjusting. Up to type 3 you can go. But when you are reducing the risk, there are higher chances you might miss the trade. That possibility is also there. That's why proper way of risk management you have to do. Make sure you are within the 2% risk limit, or by taking type 3, you can keep an entry buffer before this. That way you can manage the risk. So this is the way today See here, exactly today morning price has reached this our entry buffer, type 3 entry buffer. Remember, this is the type 3 entry buffer. They reached, sometime price stayed here for about maybe around 30 minutes. They were here, 30 to 35 minutes. Within this area, they were moving, and finally, sharply, prices were falling down and finally reached. It did not reach 15 minutes target. Here we have a 15 minutes target. Let me go to 15 minutes time frame. See here you have a drop base rally. This is the 15 minutes target. After that, remaining all are medium size candle. All these are all medium size candles. But failed to reach this 15 minutes target because there was a 5 minutes high liquidity zone here that was stopping the prices. But even though it is a pierced zone, but it is stopping the prices. Let me show you how it is. See here you have a rally, base rally. This is the one holding the prices for several times. See, first candle, second, third, fourth, fifth, sixth, seventh, how it is holding the prices. Now also this is the one preventing. Either you have to exit by seeing the earlier price action, or even if you would have waited again here slightly pierced, but still it is holding. The most of the day it was holding. So definitely, see, if you don't exit here, you have to exit here, or you have to exit. But what you lost? Time. But definitely, this is the area did not let the prices go down. So definitely somewhere here, you have to book your profit. So until this 5 minutes high liquidity zone area, what is the profit NMDC has given? NMDC has given a profit 27,270 rupees profit, which is 11% ROI as per one futures margin cost. So this is an excellent trade, NMDC. Next one we will look into PNB. PNB is a 75 minutes high liquidity supply zone. It gave couple of trades today. This is a 75 minute zone. This is a drop candle, 2 base candles and a drop candle. This is what our software identified this zone. And this one is fine tuned with 15 minutes time frame. In the 15 minutes time frame, you have 2 order flows here. One is a rally, 3 base candles and a drop. And again drop, base, drop and follow through candles. And in these 15 minutes, you have 2 5 minutes order flows. So this is a failed ERC candle as a rally. You have a base, drop with a small pro gap. This is one zone. And another zone is you have this is a rally candle, 1, 2, 3, 4 base candles and a drop that way. Or you can also consider drop 1, 2, 3, 4, 5 base candles and drop. Either way it is okay. So what happened today? Once market started, see, prices entered into this zone and then sharply came down and finally reached the 15 minutes target. So in morning 9:15 candle you got the trade, and 9:35 5 minutes candle it reached the target. Here you have a 15 minutes target. You have a rally base rally and prices entered and reached into this target. Next time it is violated because here see the first 9:15 minutes candle prices enter deep inside. There are higher chances this will be. Moreover, it is a very small institutional order flow. Next again you see here this rally base drop it entered. Again at what time? 9:45 candle it entered. But this is a 15 minutes candle. 9:45 15 minutes candle. But have you noticed this drop base rally? This is. See, at the time of at the time of taking the trade, this was our target. Rally base rally is our target. Why? At the time of taking trade, this zone is not completed. Why? because this candle is not yet completed. When prices reached here, this is an ongoing candle. See, after it took the entry, sharply prices may come down. That possibility is there. Just imagine, prices came sharply and closed here. And can you take this candle as a leg out? No, it is a failed ERC candle at that time. So your target will be this zone. But see here what happened. When you have a drop, you have a base, prices were sharply moving, you took the trade, this is your target. But after that what happened? The prices came down and finally the candle is closed here. Now it resulted as a leg out candle. Immediately you have to revise your target as a drop base rally. This is your updated. Of course, the later prices reached this zone. This 15-minute zone is violated. But you never know, right? There is a possibility it will pick up the orders and again further it will go and it will violate. And if you are still in the trade, this zone might be violated and instead of getting profit, you would have got a loss. So that's why you can't take that kind of risk. You have to exit here. So when you got the trade, let me go to the 5 minutes time frame. You get clarity. You got the trade at 10:55 candle and reached the target at 11:35 minutes candle. So that means within 35 minutes your trade is completed. And what about this morning 9:15 and when it reached 9:35? So within half an hour, less than half an hour, this trade is completed here in 20 minutes. First trade is completed in 20 minutes, second trade is completed in 35 minutes. So how much profit PNB has given? PNB first trade it has given 9,200 rupees profit, which is 4.2% ROA. Second trade it has given 6,480 rupees and it has given a 3% ROA. You may think maybe if you would have holded, you would have booked your profit, maybe you would have got some 6 or 7% ROA. You might have got that way, you might be feeling. But you can't predict the future. When you have a clear 15 minutes zone here, let me go to 15 minutes time frame. When you have a clear drop base rally, this is a large candle. If this is a medium size, maybe we can say we can look for this target. This is a clear large candle. See, actually after it reached this target, again prices were pushed up. Maybe supply was very strong. Again later they came back. And finally all these 15-minute zones are violated. Okay, this is about PNB. And the next one is Bandhan Bank. Bandhan Bank is also a 75 minutes high liquidity supply zone. This is a failed ERC candle as a leg in. You have a base and you have a drop and follow through candle. You might be wondering why this is not kept in the. It could have been drop, 2 base candles and drop. That is the feeling we are getting, right? As I told you earlier, our software is also identifying the imbalance by using its own algorithm, from where exactly the imbalance has started. That way, perfectly, that level it is identifying the zone. From here, the imbalance started and continued. Though it looks like a medium size leg candle, but still, software point of view, it is considered as a leg out candle. Imbalance took place here. Okay, anyway, let's go to the 15 minutes time frame. In the 15 minutes time frame, we have a 15 minutes, 2 15-minute zones are there. So here you have a drop candle, a failed ERC drop candle. This is a big candle. You have 2 base candles and again you have a drop candle. Again here you have a drop candle, 1, 2, 3, 4, 5 base candles, and then you have again a high explosive leg out candle. See, the moment I hide this high explosive, see this is looking very big candle, right? The moment I show, all of a sudden the candle size is changed. So that's why this is the biggest problem with the chart sometimes. Some large candles make remaining candles very, very small because of charting. But if you look into see how big it is, you understand on the scale. That's why it made remaining candles small. That's why the moment I hide the big candle, you got the real structure of these candles. Now it is a big candle. All these candles are smaller candles compared to this big. So anyway, here we have a drop base drop, and again you have another drop, 5 base candles and drop candle. Now these 15-minute zones again fine-tuned with 5 minutes time frame. The moment you look into this, all these candles, see, here the structure is not good. Why? Because we have a rally candle, 2 base candles and a rally candle, drop candle, another big drop candle, in between no base candles. Let me hide the bigger candles, you get clarity then. See here, you have a rally, 2 base candles, rally, rally, base, rally. Next a drop candle, no base candles in between. Again a drop candle, no base candles in between. So that means there are higher chances this zone will be violated easily. And see, the big consolidation took place here. But what about here? This is a failed ERC candle, a very large candle. You have a base candle and drop candle. See how exactly adjusted the this zone within this 15-minute zone, that we are managing the entry. If you feel risk is high, still you may reduce some more and you can take entries. The more and more you reduce the risk, there are higher chances you miss the entry. So that's why you should make sure that risk management should be done properly in the fine-tuned 5-minute zone. So I exactly adjusted this. Instead of keeping like this, to the proximal line of this 15-minute zone, I adjusted the 5-minute zone. So that risk will be managed in a better way. Okay, today what happened? The price is entered into the zone, but it did not reach the 15 minutes. 15 minutes target is very, very far away. Somewhere here you have 15 minutes, rally, base, rally. This could be the target. Now let me go to the 5 minutes. See, target is very, very far away. And moreover, once price entered into the zone, finally sharply it came down, and then demand might be very strong here. It is not letting the prices go, but just achieved 1:3 RR, 1:3.06 RR, it achieved. After that again prices, demand is very strong. Somewhere here, from 5 minutes itself, institutions kept strong institutional order flows. Again prices moved and this zone is violated. And entire 75-minute zone also slightly pierced. And here completely 75-minute zone is violated. After that prices came down, there could be some trap here that might be holding the prices and pushed it down. But okay, let us focus on the fine-tuned 5-minute zone. See, earlier I focused on the traps and all. Nowadays, why I am trying to minimize those trades is because most of you people are learners. You are not properly analyzing the charts and assuming, and many of your traps and all hitting stop losses. Ultimately you blame, okay, these traps are not working. While identifying the traps and all, you have to do very clean and neat observation. Some experience also required. So that is one of the reasons why in the recent time I am not really entering into them, unless some traps are very clear and neat, and even inexperienced people also easily can identify. Such kind of things only I am focusing. Any complicated things, price action you need to observe. Such kind of things I am not discussing in the HLQ analysis videos. Otherwise, definitely this could have been a good trade. I'll show you how there is a good trap available here. But before that, this one has given 1:3 RR and very small, because the risk is very small here. Your reward is also small. Bandhan Bank has given 1,456 rupees profit, which is, see, only 1.1% ROI. Where is our 6% average intraday ROI and where is 1.1%? Nowhere related. But anyway, it gave a profit. Profit is a profit. Maybe it is a small. Still it is a profit. So it achieved 1:3 RR. Bandhan Bank. Okay. So I was talking about a trap here, right? See, always the traps, what you have to do, first you need to go to 75 minutes. This is high liquidity zone. See, one thing is, here you have LOTL zone is there here. Let me draw a 75 minutes LOTL zone. Drop, base, drop. This is a 75 minutes supply zone. I'm giving light color. Drop, base, drop. From this 75 minutes zone, go to the 15 minutes time frame. Why this trap is very strong, you will understand. But is there any proper structure here? No. We have a drop, base, rally, and again prices came, drop. These are all the small, no base candles here. If at all you consider, the only thing you should consider is drop, 1, 2, 3, 4 base candles and drop. The 15-minute zone has overlapped with. See here, you draw this zone. You have a drop candle, you have 1, 2, 3, 4 base candles and a drop candle. This is like 15-minute zone as an horizon to the 75-minute zone. The high liquidity 75-minute zone. This is the 15-minute zone. This 15 minutes is horizon to this our high liquidity 75 minute zone. But this 15 minutes is a overlapped zone within this, not overlapped, fine-tuned zone within this 75 minute zone. So this 5-minute zone is acting as a bridge between these two zones. This is a drop, 3 base candles and drop. This is the fine-tuned 15 minutes zone for this proximal line, and also this is the fine-tuned 15 minute zone for this high liquidity zone at the distal line. Have you noticed? For our high liquidity zone, this is the distal line overlapped. For the above 75 minute zone, it is overlapped at the proximal line. And for our high liquidity zone, it is acting like a lower time frame zone as an horizon. Now go to the 5-minute zone, 5 minutes time frame. Okay. Is it having any proper 5-minute zone here? No. Within this 15-minute zone, again this is only coming. Drop, base, drop. This is already a fine-tuned zone inside this 15-minute zone. It's not coming. But have you noticed here you have a drop, base, a drop. Supply zone. Is it a fine-tuned zone? No, it is not a fine-tuned zone. Is it an aggressive trade setup? We don't know. No proper price action close. Okay, it was holding all these candles before this. Now let me delete all these things, because this is not a fine-tuned zone. But it is part of the 75-minute zone. Maybe it may support aggressive, but at present we don't have a proper price action close. So I am deleting 75. Now look into this 5 minutes drop, base, drop. Today it is came very close to the zone. See here, they didn't reach, but came very close to the zone. Maybe kept entry buffer, you would have got a trade. So that way this 5-minute zone is acting. Moreover, this is a type 1 proximal. This is a drop, base, drop is a type 1 proximal. That means type 1 proximal also price did not reach today. Maybe next time this zone might be working. Now this zone got the clue. What kind of clue? Prices came very near to the zone. Now this zone can be planned as an aggressive trade setup. Next time prices are entering into this zone. Why aggressive trade setup? Because prices came very close to the zone and then started moving away. That means in this area the institutional order flow is very, very strong. Maybe if you would have kept some entry buffer, you would have got a trade, maybe. That way it might have acted as a trap. But anyway, prices did not enter into this zone today. So that's why I didn't really focus on this. So why I am explaining, just to tell you how I am performing the analysis. The similar kind of understanding you should also get while analyzing the charts. That way your experience levels will be improved. Over a period of time you will become an expert. But anyway, my interest is not on this. Our interest is only on this fine-tuned 5-minute zone that has given 1:3 RR. But it failed to reach a 15 minutes target. That's why I have achieved only 1:3 RR. And this is the smallest ever profit given in our HLQ zone so far. Maybe previously once also I remember came close to 1 or little less than 1% it has given long back. But anyway, recent time this is 1.1% ROI is very small in our HLQ zones. And the next one is Indus Tower. And Indus Tower, this is a 75-minute supply zone and this is the one stopped out today. See here we have a drop, 3 base candles and drop. This one is stopped out today. Okay, how I fine tuned? Let me go to the 15 minutes time frame. In the 15 minutes time frame we have a 15-minute zone rally. You have 1, 2, 3 base candles and a drop candle, follow through candles. Everything is good, excellent structure. And this 15-minute zone again fine tuned with 5 minutes time frame. See here you have a failed ERC as a drop candle, as a leg-in. You have a base candle and drop candle with small hidden body. That means small program. After that prices were coming. Maybe you may feel, why can't we draw again a drop, 1, 2, 3, 4, 5 base candles rally. See, the risk is very, very high. That is one thing. Second thing is, in case if this is stopped out, then your stop loss comes within this zone. That means both these zones like LOTL zones. And you have LOTL zones, during intraday you have to prefer the upper one if the risk is not manageable. So that is the reason why we should limit to this drop base drop. See today what happened? This entire zone is easily violated. Morning 9:15 candle, 9:16 candle. Go to 1 minute, you will get better clarity. This is morning 9:15, 1 minute candle. This is morning 9:16 candle. So the definitely 9:16 candle, you would have placed your trade here. Maybe if it is 9:15, you may assume maybe some people would not have taken trade in 9:15. They would have escaped from this stock. You may think like that, but 9:16 candle, prices entered, definitely you would have planned your trade. And zone is pierced. Probably your stop buffer might have been violated slightly. After that again prices came down. This time clearly price is violated and moved up. Throughout the day the market was moving up in this stock. Okay. So this is the way, this is the stopped out trade Indus Towers. So how much loss we got? Indus Tower has given 850 rupees loss, which is 0.6% negative ROI. It's a very small loss. So these are the executed trades today, and the remaining stocks prices did not enter, but let me quickly explain how we fine tune the zones. First one is L&T. L&T is a daily zone rally base rally. This rally base rally is fine tuned with 75 minutes time frame. See here you have drop base rally. This is the 75 minute zone. This drop base rally, again we have 15 minutes fine tuned zone. You have a drop candle. You have 1, 2, 3, 4, 5 base candles and then a rally candle. Sorry, this is a rally candle, not drop. This is a rally candle, big candle. You have 1, 2, 3, 4 base candles and a rally candle. The 15 minute zone. This 15 minute zone, see here, we have again a rally to base candles rally. That way also you can draw a zone overlapped with this LOTL zone. But anyway, my interest is on the 5 minute zone that I will explain. So I'm going to the 5 minutes time frame. Five minutes time frame. See, this looks like a drop candle, 1, 2, 3, 4, 5 base candles and a rally candle, right? Hide this candle, surprisingly we'll see how this zone looks like. You have a failed ERC candle, you have 1, 2, 3 base candles, again drop candle, but is it a bigger candle or medium size? Medium size. So I have some concern about this zone here. Even though I have drawn, probably I am not really comfortable taking a trade from this zone. Maybe it will work or not, that's a different story. But trading point of view, I have this zone. See, this is like a drop candle, then a rally candle, in between no base candles. Or you may say this is a medium size leg, okay, you can keep part of the base. But anyway, some kind of discomfort in taking this candle, even though if you consider drop 1, 2, 3, 4 base candles. If you consider failed ERC as a rally, then you have to draw zone like this. This is a type 2 proximal entry. If you consider this is also base, then your zone will be like this. But here this 15 minute, this 75 minute zone is having rally to base candles and rally. Of course, this is a medium size, smallest medium part of the base. So that's where rally, base, rally. This is the origin. This 5 minute zone is the origin for this entire 75 minutes fine-tuned zone. The 75 minute zone is a fine-tuned zone. So probably this is the area we can plan the trade. Here we have a strong. Maybe this may work or it may be violated. Probably this is the area it will pick up the orders and again it will move up in the next trade. And also this entire entire daily zone. This is entire daily. This daily is also having drop base rally. See, this is acting as a high liquidity zone. Now also it picked up and also moved up. So this is a 5 minutes horizon to this entire daily zone. This 5 minutes horizon is also acting like a high liquidity zone. Maybe because of multiple times it is tested, assuming it could be a high liquidity. And also it is the origin for entire daily zone. This is the area strong institutional order flow will be there. Next time prices are entering into this zone, definitely we can go for a long trades. It may give a big move also. But anyway, today prices did not enter into the zone. We didn't get any trade opportunity. Next one is Biocon. Biocon is a high liquidity daily supply zone. And this is a 2002 stock. We can't fine tune the zone, and also the 75 minutes order flow in this zone also not good. Let me show you. First of all, we can't fine tune up to 5 minutes level because 2022 data won't be available for 5 minutes data. But see, 75 minute structure is not there. There is no fine tuned 75 minute structure inside the zone. So that way also we don't have any interest on this zone. Next one is Ultratech Cement. This is a 75 minute zone, demand zone. Today prices did not enter. But how I fine tuned this zone? Let me explain. This is a rally base rally. Zone 2024 stock, rally base rally. This one is fine tuned with 15 minutes time frame. So here drop base rally, 15 minute zone. Drop base rally is the 15 minute zone. But go to the 5 minute zone, 5 minute structure is not good inside the 15 minute zone. But it has a LTF zone. But first go look into the 15 minute structure. See here you have a drop, base, again drop. If you hide the large candles, you get better clarity. See here you have a drop. It's a big drop candle. Then rally candle. In between no base candles. But definitely some order flow, it picked up and moved up. So what is that order flow? Here clearly it is showing rally base rally. And this rally base rally is the origin for this entire 75 minutes high liquidity zone. Picked up the orders from the origin and then started moving up. Huge rally. So that's why our trade plan should be on this rally base rally 5 minute zone as an origin to 75 minutes high liquidity zone. Maybe risk management point of view, you can take type 2, proximal. So that is your trade plan. But what is the reason behind this entire 75 minute movement is because of this rally base rally. But anyway, today prices did not enter. We didn't get a trade. And the next one is CESC. This is also a 75 minutes supply zone. This is a drop base, drop, follow through candles. And this is not having a proper 15 minute structure. So in this zone, there is no proper 15 minute structure within this zone. No proper legouts here within the zone. So that's why what I did, I looked into 5 minutes because here something is, see here, some order flows. This is today. Previously also here in this area, prices sharply came. So I want to see if there is whether I can plan any aggressive trade setup. Went to the 15 minutes time frame. In the 15 minutes time frame, you have a drop, 2 base candles and a drop. Already once it is tested. Second time, see, prices came near to the zone, again came down. Maybe the order flow is still very strong in this area. Maybe we can plan next trade also. See, today again also prices came near to the zone and then sharply came down. Maybe next time it may give you a good trade opportunity as an aggressive trade setup, this one. But anyway, today we did not get the trade. Next one is, last one is Voltas. This is also a 75 minute supply zone. We didn't get a trade today. But how we fine tuned? First of all, our software identified drop base, drop with hidden body. See from here, it's a big hidden body, drop candle, follow through candles. This one is fine tuned with 15 minutes. But in the 15 minutes, have you noticed? I am seeing rally base rally I am seeing. So it's a ERC candle, big candle. Next again drop candle, in between no base candles. So that's why I left this zone. Maybe next time the zone might be violated. So that's why we didn't plan any trade in this. Even prices also did not enter into the zone today, because outside the zone some order flows might be here, that is pushing the market down. So this is about the HLQ zones identified from our previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.